I can hear myself, John. I'm just talking to myself here, but I wasn't talking to any of you, so it's all good. Good morning. Don't tell anybody. I'm joking. All right, let's get going here. All right, so the unbelievable happened yesterday. Somewhat unbelievable. That was a hell of a reversal day the day before yesterday. And we had this as a possible scenario, but we different scenarios we have. We look at them and say, well, this one seems the least probable of the scenarios based on the current pattern. Well, the least probable happened yesterday, and maybe not so much in the Dow, but certainly in the Russell, and we'll get to that, where the gap down was borderline over the edge as to the depth of the gap down. You can see right here on the Dow, going with the diamonds here, it was more than 50%. And that opens up the door to what happened, because a gap down after a big wide range bar like that in the upper 50%, and ideally if it was in the upper third, it would be like no big deal at all, and we'd probably look to buy that, with the proper intraday pattern. Well, it gapped down, it tried to rally, and it just couldn't, and down it went, and now there's no support. We got the gap fill here, and there were a bunch of gaps. This one got filled last week, and now we've got this one filled, and there's others down below, like right down here. So what I did was just take a look at what are probable targets, and again, that it assumes that prices are going to continue to go lower now that we've got this M top here, and we've got a break of major support, a couple of pivots, and as far as the Dow goes, which has been the weaker, a close below the 50 MA. And so just going down to the 200 area, a 5% correction wouldn't be that big of a deal. It's down here at support. The 200 MA is a widely followed moving average. This is a simple period moving average, not an exponential. The exponential could be in a different location. That doesn't matter to me. This is the one that I use. And you can see it's aligned with price support, so it would make sense. Now, we can't just ignore other areas as it comes down. This gap up area right here, if I consider this from the point of a measured type of a move, kind of puts it down here anyway. So anyway, I think the 200 MA could be a likely target, and we'll see. And as we always do, we, bar by bar analysis to see what happens. There was a little bit of a recovery late in the day, some short covering, I imagine, or maybe late day buying. And we got a little bit of a tail, not a big deal, huge volume on this way down. So we do know that a lot of institutions and traders were shocked. And of course they should be, a gap down and a reversal after a huge green day like this, that gap down and buy is like, where'd everybody go? What happened here? All those buyers that were so entrenched and in power and pushed prices all the way back up into this prior day there, they're all gone. So definitely a shock. We'll see how far this can come down here. Things are kind of down a little bit from the end of day move up, but no big deal. Spiders, we'll get to the futures. Spiders, 200 MA, be about a 5-6% correction. We still got to see what happens here when it gets to the 50. There is an unfilled gap. And so this is part of what Dan and I always talk about, the factory work. What's the factory work? Giving up the markets and going to the factory? Well, no, of course. But there's just the foundational procedural analysis that's done regardless. Where's the reference points? Is there an unfilled gap? Where's there a prior swing low? Is the trend up? Is it down? Has it violated the trend? So those are just basic questions that we go through to say, this violated major support. Oh, yes, it did. The trend is no longer up. Where's the next reference point? 50 MA is a logical reference point, but it's subjective. Is there anything to the left? Well, not really. Kind of, but, nothing of significance there. But there's an unfilled gap down here. Is there a whole number? Oh, 280. That would be a pretty big number right there in alignment with that. And here's the 200 and bar by bar. What's the next part of the factory work? What's the first reference point of resistance? Prior day's high, support, prior day's low. Right now, we've got an inside day starting to shape up, which certainly could make sense as well. Some stabilization after the break. So, what happens here today, looking at various markets, does one show relative strength versus relative weakness, looking at different stocks, some gapping up, like EA, gapping up. This is kind of a, been a dead money for quite a while, but trying to make a base here. So we look at things like that. This new IPO that is just, everyone's in love with for the moment. We'll see if it falls to earth eventually, like a lot of IPOs do. So we just go through these and look at what's, outperforming, underperforming. Once a trend is broken, what are some likely targets? And then we monitor on a continuous basis. We've got the Qs, which we all follow. About a 5% correction in the area of the 50 MA. Still be this unfilled gap down here. Would bring it down into this area. Yesterday, it bounced off of this 184-ish area there. There's a little consolidation, but we've got a rounding top now and a break. No break of major support, but a rounding top, and it's moving down. And so we'll just see where this all goes. And, looking at the weekly charts, while the trend is still up, this is a pattern that says the momentum has slowed down. And this is the first, we've got a couple of days yet to go. This is the first pattern in the weekly time frame that's gotten a little bit bearish. Right? This one here looked like maybe it was going to roll over, and the next week it was ignored. That could certainly happen next week, but we'll see what if that does next week. But right now, what increases the odds of this one being more meaningful is the fact that it's up here near the old all-time high. And looking at the spiders, we see a similar on the weekly time frame, and we just go through different markets and see what they look like. So here, the Russell on day before yesterday was the only, I think, the transports in the Russell of the major market indices, ETS, was closed positive, meaning it gapped way down and came all the way back. And this one seemed less likely to fail, but there you go, it did. And so while we can recognize this as a crazy, Mr. Schizophrenic pattern of uncertainty with overlapping bars back and forth and tails, this is kind of also a self-correcting uptrend of a grinder. So can this actually survive here and hold this area? And that's something else that we'll be looking at. So even if we see the Qs go lower, if we see the Russell hold this area and start chopping around, that's an indication that they're not throwing the baby out with the bathwater, so to speak. Not that the Russell has been in favor. It hasn't been, but it does bring up the rear. And, the pattern overall was becoming quite constructive and then broke out last Friday. So we're not so sure that this will actually break down. Maybe it will. And if it does, that'll be another coffin nail, so to speak, short term in this market. The transports, they came in. They held a major support. They held a converging 50 and 200. We'll see if they can continue to do that today. So a lot of information suggests that prices are going to continue to roll down. But now let's see, can the buyers step up once again and save the day and see if this market can turn back up one more time? Mid caps. These certainly look like they were going higher. And so now we've got this trading range. Let me just duplicate that. We've got this trading range here. So this is another market we'll be watching to see whether it holds the bottom of this minor trading range or does it head back down. Now, there's no denying that this gap down and move lower is suggesting it's going down. But we have indications or patterns, historical patterns that suggest a move in one direction. And then we see what actually does happen. That's what we do as chart readers. We look at the pattern, we say historically, what does this pattern suggest is going to happen? Historically, what did it do? And then we use bar by bar analysis, relative strength and weakness, intermarket analysis, market internals, and say, well, what's happening for real in the moment? Is it in alignment with the past or is something different? That's what our job is, to assess that. And notice I mentioned yesterday how the ranges were tighter and now they've gotten much wider. That's another indication of uncertainty there. Okay, I'm just reading statements in the green room. All right, so let's take a look at the futures here. Get cleaner charts as far as, because the 24-hour chart. Tested the 50 MA. And so as it comes down here, is it going to stabilize? Notice I've got the unfilled gap down here. And, ultimately 2,800 could be the place to go. Let's just look percentage-wise what that is, give or take. Oh, why did it do that? Oh, because you picked the horizontal line, Gregory. There you go. About a 5-6% correction, give or take, right? Which is, been in alignment with prior corrections going back the last few years where buyers would set up. It's an obvious area there. So we'll see. Does it hold the 50 here in the next day or two? Do we get a green bar that, is ignored and it heads back down? And if we get that, then we look for lower prices. It's as simple as that. We continue to look for shorts. And when it gets down here, we then look for patterns that suggest buyers are stepping up, right? Like that. Red bars ignored, bottoming tails, or big reversals with a big green bar. That's more of the factory work. Recognize reference points. Recognize what happens when prices get to the location, right? The bus stop, so to speak. When they get there, are the passengers getting on board? Or are they saying, hey, let's try the next stop? We'll see what happens when when and if we get down there, which probably won't be this week, but we'll see. And let me clear that up. Qs. Now, this is the market that is the most vulnerable, I think, to a bigger correction. And let's measure that out. So 7,500 is I think, going to be a pretty big number. And the 50 MA is right there. So that would be about close to 5% at the 50 MA. And then if we went all the way down to that big support area, that would be about a 7% correction. So those are the places that I think most likely that we need to focus on to see if buyers begin to step up and whether we get, this kind of a pattern where everybody's getting on board again. And we'll look to see what breadth internals look like and what sentiment looks like. What we want to see when prices get down here is that what we call the wrong way option traders are just loaded to the eyeballs with puts expecting a crash. And that would be supportive of a turn. And if they're still buying calls down here, well, it's likely it's coming down here. But we'll see how that unfolds. Why do you discount minor support? I'm not discounting it, but it's already gone through this area here. So this is like nothing. And this is minor support is subjective. I know many people will look at it, but during a market correction, minor support historically doesn't hold. Prices go down to major support during a market correction. In other words, institutions want to start to getting in at what they believe to be the safest point. Right? Volume probably doesn't mean a thing, trader. And you're talking about the spiders at 288. You just have a cluster. You have a cluster of overlapping bars here. Look, that may be the point. I am never about exact points on a chart. I don't believe in Fibonacci. I don't believe in Elliott wave. I don't believe in Gann. For me, that is the black hole of hocus pocus trading. And those that try and pinpoint an exact point are just trying to market what they sell. And predicting the future and ultimate certainty sells. If you want to be successful in the markets, just recognize this as an area and then look at the price patterns that form in the area. Look at multiple time frames. Look at your weekly chart, your monthly chart. See how things begin to bottom out at a reference point. It's that simple. You don't need to measure something and say, hey, this is a 0.682, Fibonacci, whatever, with an Elliott wave 5 count and a square of 9, and this is the place to mortgage the house. That's ridiculous. That is not what intelligent people do. Right? But it is something that sucks in the novices. And I can't tell you I was any different when I started out, because I looked at all of that bullshit. And whether, the full moon, the new moon, the Fibonacci's, the wave, not the wave counts, but, the fib extensions into the future counts and all of that stuff. Look, when the prices get to a certain point, buyers are going to step up and it's going to be there for everybody to see. Right? You just need to recognize patterns bar by bar. What does it say? And then at that point, you'll say, hey, I'm willing to buy here with a stop below that level in case it doesn't work out. Right? So that's what it comes down to. It's not about knowing ultimately with a guarantee, but people like to buy guarantees. That's a huge business. Buy a guarantee on your refrigerator, buy a guarantee on your phone, buy this, a guarantee and that guarantee. I'll guarantee you won't lose money if you buy the market here. Okay. Wait, you didn't read the disclaimer clause. Sorry. Come on, guys. It's too good to be true. Right? Rolling, rounding top on the Dow futures here, and we do the same thing. 200 MA does look like a likely point. A lot of times it could be that magnet, as we say, but we've got this congestion area right here. Notice the big area, right? Where it actually stops, nobody knows, but getting caught up on a specific number is more likely to leave you behind watching rather than participating at the appropriate time. Bonds flat here today, but pushing up, which means interest rates are coming down. You see they're in an uptrend. They pulled back to this minor support level. And this is where, Alex asked about minor support. Well, in an uptrend, yes, that's where we look for minor support. Even though it's a bit subjective as a reference point, it does work when prices are in an uptrend. But after prices break trend, historically, prices go down to major support. Don't forget the Ichikumi cloud. Well, that's the ultimate chart artist indicator. Right? It is impressive looking. Right? It is impressive. And it promises to do everything from support, resistance, trend to, where's the guarantee? Anyway, bonds going up, interest rates are coming down, yield curve starts to become in question again. And of course, we know about the trade tariffs that are looming, right? I think sometime tomorrow they're supposed to kick in. And so let's see if the world comes to an end. Gold, retesting the low here. Starting to look a little interesting. You know, it's been correcting for a while. So this is getting somewhat interesting here. It's been this, deeper correction over the last few months. And I think this will be worth keeping an eye on here in the next few days to see if it actually can make a turn. Last time, look at what time is it. Let Dan get on here. I'm running late. Oil trying to bottom out here at support. And let's look at the gold miners for a sec. You know, they're kind of pretty beaten down. I'll come back to them next week. With that being said, Dan, it's all yours, my friend.
All right, thanks. Good morning, everyone. We have a record number of low open positions, as we talked about yesterday, which is fine. MJ here, we have a tight put spread, 34.32. And that's it in the swing letter. And the weekly option ladder, we have, we stopped out of our put spread. We have a call spread. I moved stop. I sent it by Telegram this morning. We're going to move at the tighter of yesterday's higher break even. We're at 50%, almost 50% of max profit. At the low, we're probably 2/3 of max profit. Michael, yeah, I got an email about that also. Somebody was concerned. Yeah, we have a Costco. This is our other position. So let's just talk about that for a second. We're short an out of the money call spread, right? We're short one call and then we're long a further out of the money. If you are long stock, you get the dividend because you're a shareholder. If you're short the stock, you owe the dividend. So the risk in being short options, short call options, that is, if there's early assignment, then you have, you're going to be assigned short stock and then you're liable for the dividend. That's a mathematical fact. But now let's talk about reality, okay? Who on earth would make an early exercise? So what strike are we short? We're short the 247.5. Okay, so somebody sold that call, which is us. Somebody bought that call rather. And if they wanted to, and so they paid money, let's just say 50 cents a share. They paid 50 cents a share for the right to buy Costco at 247.5, right? Is everyone following? Because this is important. Why on earth would I want to buy the stock at 247.50, lose my 50 cents of intrinsic value, which gives me a cost basis of 248, when the stock's trading at 239 and change, right? The only risk is if it's fairly deep in the money and the long call option mathematically calculates to say, hey, it's better for me to lock in my profits, have early assignment, get the dividend, as opposed to losing the remaining extrinsic value. I know this is getting a little advanced. So just if you don't have to worry about it unless it's deep in the money, which doesn't happen to us the way we trade, because if they did make early assignment, you have arbitrage profit. Because now you're short at 248 cost basis and you would cover right now. Does that make sense, folks? Yeah, this one guy emailed me kind of just a textbook answer from the broker that, you know, it's textbook. It was scary to somebody who doesn't know. They're like, oh, you have the risk of this and early assignment and you're subject to the dividend. Well, all that is true. It's just not stated in relation to where the stock's trading right now. Okay, we'll come back to talk about it more if you want. Let's look at gappers here. This is big old mess, Cody 1150, bear. It's a bearish gap down way into this bar, but I don't like the way it trades. Let's move on. Fold 1350. Are those trader, those earnings too? Because I don't have them all. Let's just see if we can find some tier ones here. Remember, something's up with gold here. This stock, not the commodity. The way it gapped down like this. But this daily chart on gold on 10, 15-minute high looks like a put spread. This ugly thing, ICPT, is a bear 1, 2, 3 continuation if it closes weak. MCK, kind of far from the 20, nothing to do. MPC, another week. Oil stock, let's see what it does. Whiskey Bravo, nothing. Triple D, wow, that's getting taken out to the woodshed. This is my cable company, guys. Give me a second, my cable's down.